Let's now turn our attention to an industry that some have sarcastically referred to as the ugly sister of the financial sector. I'm talking about the insurance industry, which, in a new report released yesterday, is said to have slowed down in 2018. According to the Association of Kenya Insurers, the penetration of insurance in Kenya dropped to 2.4% last year, hitting its lowest point in 15 years. Which begs the question, is insurance on the decline in Kenya? To help me answer this and other questions, I'm joined by Washington Deger, the chairman of the Bima Intermediaries Association of Kenya. Welcome to Metropole News at 7. Thank you so much for joining me.
Yeah, thanks a lot for having me.
Great. Now, I just want to jump right into the first question, just ask you, is insurance on the decline in Kenya? If so, why is it?
Insurance for quite some time has been on the decline in what we call real terms. There's what we call insurance growth in terms of the GDP. You know, as the GDP grows, the premiums from insurance, they are calculated according to the growth of the GDP, you know.
Okay.
Then there's what we call insurance growth in real terms. Mm-hmm. That means how much percentage of the population has taken up insurance,
okay,
as against the GDP growth, right? The report we have from Association of Kenya Insurers is a more trusted report than that done by IRA, Insurance Regulatory Authority. Okay. Because Association of Kenya Insurance, AKI, bases its report from audited accounts of insurance companies. IRA bases its report, the insurance penetration report, on unaudited accounts that have not been audited. So we prefer basing our arguments on AKI report. And let me go further and say, insurance for quite some time has never had the growth that people talk about all the time. And that's something I've been saying for years and years. If you see now that you're talking about insurance actually declined, it's actually a worrying trend.
Okay.
Because you see, there's something we've been saying all along. The main drivers of insurance in Kenya are the insurance intermediaries. Mm-hmm. Insurance intermediaries are the brokers and the insurance agents in Kenya. Brokers, they're about 200. Insurance agents in Kenya over 10,000, right? Mm-hmm. And I say, we need to concentrate our energies on the 10,000 insurance agents. Of course, not leaving the brokers, but the 10,000 insurance agents in Kenya have actually been neglected by the industry. There is no program for training. There's no program for encouraging these people to do more, so to speak. What do I mean by that? As far as, you see, for example, like Insurance Regulatory Authority has a big budget running into billions per year, right?
Okay. Yeah.
Of that big budget, instead of concentrating on insurance agents and training them, the current people in the field, they go to do what you call training. They have a certain program they have rolled out in the counties called Executive Certificate of COP, ECOP. Mm-hmm. It's a 2-week program. It is meant to equal what you call Certificate of Proficiency, COP, which is a minimum qualification that you need for you to practice insurance, right? For COP, for you to get a COP, you need at least a minimum of 3 months training. But now you have a 2-week training called ECOP against a 3 months training of COP, right?
Yeah.
Now, you find there's disproportionate amount of money being spent on ECOP in the counties. Hundreds of millions of shillings. And ECOP produces absolutely nothing. The people who, you know, ECOP is supposed to train people to join the insurance industry and sell, or rather be insurance salesmen, so to speak, right? Mm-hmm. But the number from ECOP that actually practices sales in Kenya is less than 0.01%, right? Mm-hmm. We keep on arguing. Mm-hmm. This money that is being wasted, we have a wasteful government. This money that is being wasted on these trainings, these phantom trainings, why can't it be diverted to training the 10,000 insurance agents who are already practicing insurance? It makes much more sense. And I mean, and I'm telling you, the skewed priorities of this government is what you say the chickens are coming home to roost. The results are now coming home. Yeah. And I'm telling you, this is not the end of this, Brenda. Yeah. This is going to go down lower. This is just a beginning of a downward spiral. Let me continue and say, we've been fighting also what we call introduction of bad laws. There seems to be like a war in the industry, between the industry and intermediaries.
Before you even continue, there's another issue I just want to look at,
Yeah.
where insurance providers have long been accused of engaging in price undercutting
Yeah.
practices that determine,
Yeah.
that undermine the industry's ability to take on risk and make a profit.
Yeah.
Why is this practice prevalent?
You see, the point is this. There's no cohesion in the insurance industry. When they talk about a certain price for a certain product,
Okay.
everyone is on to their own. Yeah. Everyone wants to get a little bit, everyone wants to sell so much of the product on their own without, regardless of what the industry thinks. If they price, for example, third-party cover some time back, they price it at 7,500 shillings, right? Right now, you have people selling the same third-party insurance cover at 3,500, less than half of what they agreed on. There's this price wars that can never finish. Once you start a price war, you're done.
That's it.
You can even sell it at 1,000 shillings.
Okay.
Because all you want is the numbers. Instead of looking at even the quality of business that you're getting. This guy who's comfortable paying 1,000 shillings, well, most people will pay 1,000 shillings because they just want a sticker on their car, right? But are they getting really are they getting value for their stickers, so to speak?
Okay.
Right?
Yeah.
This price undercutting, it's something that insurance companies have got to come together and handle. That is not something for the insurance agents or the intermediaries, right? Us is we are given the prices, we go out there and do our thing, and we bring in the business, right?
And what about the mistrust that has kind of accumulated over the years towards insurance companies? Because we've seen cases in which insurance companies gladly take premiums but fail to meet the claims. And would you say this is one of the reasons why there's a low uptake of insurance in Kenya?
That's right. You see, brother, there's a lot of mistrust. People don't trust insurance companies or the insurance industry at all. Every day I fight these wars. Insurance companies will take your premiums and they will not compensate you. The bottom line about the insurance industry is all about claims. Nothing else.
And how exactly do you address this deficit of trust in the insurance?
I mean, we have a regulator who's supposed to do this. The regulator is not doing his work, so to speak. We have a regulator. And you see, and there's one who's working in the industry. The regulator is not working. People are not getting together and getting to the common good of the insurance industry or the common good of the financial sector in Kenya,
Yeah.
Because you see, for an economy to grow, it has got to grow together with the insurance industry. If the economy is growing at a faster rate than insurance is growing, then we have a problem.
Okay.
Because these industries that are developing, they will need insurance. If we have an insurance industry that cannot be trusted, what exactly are you doing to this country?
Okay.
We actually, this country, the other day we were talking about this country getting into a second world country, right?
Yeah.
From a third world to a second world. That's not the way you get to a second world country.
Okay.
You get to a second world country by upping up your game, and by less corruption. Because all this is corruption, by the way. And there's something I was telling you earlier, there's this issue of bad laws being crafted in the insurance industry.
I just wanted to go back on the note about regulations when we were talking about regulators.
Yeah.
Because insurance companies are trying to prevent insurance brokers from holding onto premiums so that claims can be, paid out faster.
Yeah.
Now, is this a regulation that could help the sector perform better?
No, of course not.
And why is that?
No, it's laughable. That's why I'm laughing. Because you see,
Okay.
there's nothing, brother. You do not tell we the intermediaries not to touch money so that the insurance uptake can be. Right now as we speak, the industry is going down without even these laws coming into place, which are bad laws in the first place.
Okay.
And I can tell you, if these laws are in place, the insurance penetration, insurance industry in Kenya is still going to go down lower. Because like I told you, insurance industry in Kenya is driven solely by the intermediaries. Recently, they've introduced banks. But there's nothing banks are doing in this country, really. You know, banks are simply just taking our clients and forcing them and coercing them and intimidating them to give them insurance.
Okay.
And that is not the way insurance is done. But we have a regulator who's asleep. He doesn't think these things are important. The issue of premiums, you cannot tell us we are going to be selling insurance and we are not going to handle premiums from our clients to go and pay to the insurance company, right? The excuse they've been giving is this, that when premiums come to us, we hold on to them such that insurance companies are unable to pay a claim.
Okay.
But remember, there's already a law in place.
Okay.
Before even the Insurance Amendment Act, there was a law that said, if you hold on to the premiums, you are number one, you're not going to be licensed. But the industry talks about being owed 40 billion by insurance intermediaries.
Right.
And the biggest question we ask is this, when did this 40 billion ever occur? Is it a year? Is it 2 years? Is it 10 years? And if it is those so many years, how come the accumulation, this accumulation, of course, the people who've done this accumulation, who are withholding the money, are operating year in, year out. They should not be operating in the first place. So before you even come with a law not to touch the premiums, you haven't even exploited the current law first.
Okay. Now, because of time, I just suddenly have to ask you, wrap up our conversation, move on to the last question. I just wanted to know, what can Kenya's insurance industry do to get back into the growth territory?
It's very, very simple. They should get what they call a stakeholders forum, and they be serious about it. Not for purposes of PR. We called stakeholders and we agreed on this and that. They should call a serious stakeholders forum and they ask what exactly needs to be done. Because number one, the insurance intermediaries in Kenya need to be gotten together and concentrated all the resources on the intermediaries. These are the people who've already said, this is my line of business and I'll do it as far as I'm encouraged. Okay. But there's so much discouragement in the industry. And let me tell you, they can bring in banks. They can bring anyone else to do insurance in Kenya. No one can beat insurance intermediaries in this country because banks don't do any insurance. They just collect premiums, which they convert into bank resources. Then they lend out in terms of insurance or whatever. You see, all these loans. These are insurance premiums. They are doing that too. And banks cannot leave this business easy, by the way. They've held on to it, you know. But this is not the way to do insurance at all.
All right. Thank you so much, Mr. Washington Dega, for that insightful information about where the state of the insurance industry in Kenya is right now. Now